The hottest AI company in the world might run out of money. Cash flow always wins. Look, OpenAI is reportedly in code red financial mode. They're burning cash faster than almost any company in history. They have $13 billion in revenue, but they're spending more than they're making on compute costs, salaries, and infrastructure. The most hyped AI company in the world is valued at $500 billion, and now investors are asking questions around how they're going to make $1 trillion in committed spend commitments with $13 billion in revenue. Revenue doesn't matter if you're burning more than you're making. The expectations for OpenAI's revenue growth are simply too high. So here's what this teaches us. Narrative can carry a company for a while, but eventually cash flow matters. We learned this in the dot-com era. OpenAI has the highest and best brand in AI. They have ChatGPT, they have usage, but if they can't turn that into profits, the story breaks. This is why we focus on businesses that have real earnings. Revenue growth is great, but if costs grow faster than earnings, you're just building a bigger bonfire and eventually have to dilute your shareholders. This isn't Amazon, which actually had free cash flow to fund its growth. Without free cash flow, you're always one bad quarter away from crisis mode. The music stops when you can't raise money. At Lumida, we invest in companies with earnings and the prospect of real earnings growth. Fundamentals always win eventually. Do you think OpenAI figured this out, or are they going to hit a wall? Follow Lumida Non-Consensus Investing Podcast on Spotify or Apple, wherever you're listening, to learn more about investing.